Good afternoon, everyone. Good afternoon. Happy Thursday. Are you ready for tax season? I received a lot of questions that I will be answering for you all. I gathered the questions with four main questions. Two of these questions are for individual taxes, and two are business related. So stay with me. I'll be reading those questions and I'll answer them. And also, I will be happy to answer your questions. If we have time, just put your question on the chat and I'll be happy to answer your questions. Anything regarding tax season 2025. My name is Noor Al Masri, tax and accounting professional and the founder of Noor's Books. I help business owners and American taxpayers save in taxes and stop overpaying. So let's dive in. Let me get the first question. Should I file merit filing jointly or merit filing separately? I received a lot of these questions, same questions. Should I file with my wife, my husband, or should I file on my own? Who should claim the kids if we file separately? And what should we do? The answer for this question and for any question that related tax related is always it depends. So in general, the worst type of filing is filing or merit filing separately. That's the worst because you would lose some credits. Some people give the advice based on their situation. They come to tell people, oh, yeah, why are you filing this way? You should file separately between you and your husband. Because maybe when they filed that way, they got more benefits. But let me tell you, in taxes, there's no one answer fits all. It's not the case. It doesn't happen this way. Each case is totally different. Your situation is different than mine, different than your neighbor, different than your brother, sister, different from anyone. So you should not apply what someone else does to your situation. You want to make sure you have the right advice for you. How do we do that? Usually when I have a client who wants to know which situation is better for their tax position, what we do is we do tax analysis just to know which one is better. In this case, we do a full analysis and we see which position will benefit them more. And that's how we take the action based on the situation. So don't take your answer from someone else who is not a tax professional, who does not know your entire situation. Usually we go deep in questions. We have a questionnaire, and that questionnaire asks every single questions that we need to know the answer for to find any opportunities to save in taxes for you. So this is the first question. So no one answer fits all. Make sure you talk to your tax advisor. And if you do not have someone who can do the analysis for you, feel free to reach out to me and my team. I'll be happy to help you with that. But don't take one answer. Again, each situation is totally different. Now, the second question, this is business related. So like I said, like we have two business related, two personal related. So this is, I made more than expected last year. I heard that if I elected an S Corp, I will be saving money. Can I elect to be an S Corp for 2024 now, for the prior year? So this is like multiple questions in one question. And that's why I chose it, because I received a lot of portion of this question. So let's take it one by one. Made more than expected last year. I heard if I heard that if I elected an S corp, I will save money. Well, again, it depends. It might be that you're gonna save money. It might be you saving money from this pocket, but you're spending it in another pocket. So you want to keep in mind the difference between an S corp or an LLC. First, in S corp, you cannot take any penny from your company unless you are paying yourself a reasonable salary, a reasonable compensation. So that's the first condition for an S corp. So that means you need to have a payroll. And why is that? Because when you are an LLC, you simply withdraw money from your business account, and that's how you pay yourself. And then you file and self-employment taxes. That is filed with you when you file your tax returns. So in this case, if you elect to be an S corp, you do not pay self-employment taxes anymore. But IRS wants their money, regardless if you call it self-employment taxes or payroll taxes. They want their money. So the only option that you can get them their money is to run a payroll and pay the payroll taxes in a quarterly basis or whatever basis that your business have to pay it. So that's the alternative. So technically, yes, you're saving in self-employment taxes. Actually, you don't pay self-employment taxes, but you pay payroll taxes. Now, sometimes it makes sense. Sometimes it's good and it does save you money. Sometimes it's gonna give you more headache. If you're not doing bookkeeping, then this is not the right way to do it, because once you are a corporation, once you are an S corp, you want to make sure you have bookkeeping, a professional bookkeeping. You have payroll taxes filed every single year. You need to have a payroll. You need to have an accounting plan, and that's the way to deduct expenses. So a lot of other compliance and paperwork that is going to be involved. And if you do not have someone to help you with, or if you're not ready to invest with a professional that can help you do that, then it won't make sense. And you will be paying a lot in penalty and interest just because you're not going to be able to catch up with what you have to do for an S corp. So because every entity, the way you register your entity does matter how you pay yourself and how you pay in taxes. So it doesn't necessarily work the way you hear in TikTok or from other people who might have that option. So many options over there, so many cases, but does it apply for you or not? So again, it's not always the right move to do the S corp. There are like multiple reasons, like multiple questions I would ask you to know exactly if this is the best scenario for you or not. Another thing, we do tax planning or tax analysis at least. Like we don't have to do the full tax plan. We do the tax analysis to see which portion is the best for you, which portion does make sense for you. So that's what we need to do. And in order to do that, then we can tell you, okay, what's the situation? How much it's gonna cost you if you are an LLC, and how much is going to cost you if you elect to be an S corp? And are you qualified to be an S corp? Because it's not always the case. There are like some conditions to be an S corp. So all of these situations need to be considered. I know a lot of people are not satisfied with my answers because you want to know yes or no. I cannot give you a solid answer because I don't know your individual situation. Each one has a different situation, and what you have applies to you. So this is the first portion of the question. Now, can I elect to be an S corp? retroactively starting in 2024 or the prior year, even if you're watching this later, the prior year? The answer is yes, you can. However, there's a lot of work going to be involved with this. If you want to have a late election, we really have to do your application and explain why is it a late election. And then you should be acting as an S corp since last year. And we can catch that. We do the analysis for your salary, see how much did you pay yourself, and we issue you a W-2. So you also have to pay payroll taxes. So you have to be in compliance. So it's going to cost you some money to do that. So also we weigh the benefit of that. Is it worth it for you? Should you do that, or should you act in a different way? Or should you do it in the future? Or maybe it's not worth it to do it for the prior year. So all these are the questions that we need to address before you elect. Because I know a lot of professionals, they might tell you, hey, yes, like, let's do it. If this is what you want to do, let's do it. They are a tax preparer, or they are just like people who fill out the forms for you. They cannot give you an advice. Not everyone can give you an advice. And I am a tax advisor, enrolled agent. That means that I studied with the IRS. I can do business law, business tax law, individual tax law, and representation. So, and I am updated with the law. So I know all of that. So I can help you with this. So you want to make sure you ask someone who is a tax advisor, not a tax preparer. And there's a lot of difference. Not every tax advisor, not every tax preparer is a tax advisor. There's a difference. Because again, I would say tax industry is not regulated. Anyone can file taxes for you, but not anyone can give you a tax advice. So be aware of that, and don't jump into just electing an S corp if you're not sure 100% this is what you need to do, because it's going to cost you a lot of money and you might regret it. Question number 3. So question number 3, I made $10,000 last year. Do I have to file? This is for personal taxes questions. This person made $10,000 a year, and I'm not sure if they have to file taxes. Now, technically, on the IRS level, on the federal level, if you made less than the standard deduction or equal to standard deduction, which is for 2024 was $14,600, if you made that or less, that means you do not have to file taxes on a federal level, but you might have to file taxes on a state level. So the state level have different requirements, different standard deductions. For Illinois, it's less than $3,000. So if you are an Illinois resident and you made $10,000, then you must file. And in order to file Illinois, you have to file the federal at the same time. You want to check with your state requirements because each state is different. And once you have a requirement to file a state filing, then you might have to do federal filing as well. So you want to pay attention to that. And let me get back to the federal. If you don't have to file federal, doesn't mean that you shouldn't. A lot of time you will benefit from filing taxes because you want to distinguish between filing taxes or having a payment required from you. Two different things. Filing taxes, technically you are filing to see, reconciling your account with the government and see if they owe you money or you owe them money. And the government might owe you from credit that they have or from an overpayment that you made during the year. So most likely, if you're making less than the standard deduction, maybe like sometimes you get your money back if your employer like deducted money from you. Sometimes you get your money back only if you filed, and sometimes you may qualify for some credits. And in this case, if you don't file as well, you're not going to get your money back. So filing is not a bad idea, even if you are not required to file. So these two different things. Not required doesn't mean you shouldn't. So in my opinion, you should always file regardless. But you are required to file on a state level, which is different than the federal level. For as the example I give in Illinois, the standard deduction in Illinois, 2,700 something, like less. I know for sure it's less than 3,000. I forgot the exact number, but you must file federal, state taxes, and in this case, you must file both federal and state. So this is the answer for this question. Last question. This is a business tax question. I did not make any money in my business last year. Should I file taxes? So this person did not make any money for their business. However, they did register a business, but they did not make money. The question is, should they file? The answer is yes. So there's a difference between business tax law and individual tax law. In business, regardless of you made money, you spend money or not, you must file. Because most businesses, unless it's a C corporation, they are pass-through entity. Keep in mind that is LLC, partnership, or S corp, or even a nonprofit. Well, not nonprofit. Sorry, not nonprofit. So LLC, S corp, and partnership, and also multi-member LLC. All of these are pass-through entity, even if you have to file on its own return before you start the entire return. Then you have to file informational return. I see this a lot happens when it comes to partnership return. A lot of people, they get the advice from tax preparers that they don't have to file, and they end up getting penalties. The penalty for not filing is $220 per partner per month. So you must file regardless. So you have to file your business tax return regardless if you made an income or not. And the deadline for that is for the multi-member LLC, which become a partnership, for a partnership and for an S corp, the deadline is March 15th. And this is the time to do the taxes for. This is the time you get yourself organized if you did not already get yourself organized. So make sure you do not make the mistake that a lot of people make of not filing for the business if you did not make money or you did not have activity in your business, because you have to do that and you have to make sure you are up to date with filing so you don't get non-filing penalties. And a lot of time, filing will help you get deductions, get a lot of refunds in your personal tax and your personal tax level. So make sure you are knowledgeable, make sure you know your rights, you know what you have to do before you select your tax professional, before you go and do your taxes this year. I'll be coming to answer more questions, thinking to do this weekly. Type in the comments. Let me know if you want me to do this live to answer your questions in a weekly basis during the tax season. I'll be happy to do that. If I see you guys like interested on that, I'll be happy to start doing this in a weekly basis. All right. This was Noor Al-Masri, tax and accounting professional. And I'll talk to you soon.